So if you're in the market shopping for a mortgage and you're bouncing ideas off your lender and you're asking them all kinds of questions, there may be something that the lender does not share with you at all, and it's called the PMI. Now, when it comes to the PMI, this is what you call the private mortgage insurance. They take out a insurance policy, so to speak, on the mortgage in case you default on that loan. It's typically about 0.5% of the amount that you're borrowing from. It could, depending on the cost of the home, it could range from $100 to $200 or some dollars additional on top of your mortgage that has nothing to do with the principal and interest or the taxes that you pay on a monthly basis. Now, to avoid this, you want to put 20% down. Well, everybody don't have that 20% to put down. Typically, conventional loan minimum 5% down. You still got that 15% gap that you're going to slowly eat away at the principal. And once you reach that 20% mark, that's when you can go to the lender and say, hey, I would like to get my home reappraised because I need to remove this PMI. And after they say, okay, you own at least 20% or more equity in that home, that's when they're going to pull that PMI off. And they're not going to tell you that unless you, call in and request it. So I have a client and they working with a lender, getting a new construction built. And he came to me, asked me about some numbers. He sent me the pretty much a rough draft of what they were bringing up for him. And he requested for the mortgage payments to be a specific amount. So with that being said, the lender ran some numbers and said, hey, if you bring 10% at the table and you just knock out your PMI up front, which is over $10,000, we can get your mortgage, to X amount of dollars, like right under $2,000 a month. Now remember, the ultimate goal is to get 20% equity in your home so we can just remove this PMI or not even have to worry about it at all. And we do this by chipping away at the principal. Now you're gonna have this option. What they're gonna do is say, okay, the span of how many months or how many years is it gonna take you for your PMI to mature, we're gonna charge you X amount of dollars total. What they said, don't even worry about us charging it monthly. We know what the total is gonna be. You just bring that and give that to us on day one of closing. Mind you, this has nothing to do with the principal, has nothing to do with taxes, nothing to do with anything. They just took $10,000 to put in their, paying off their mortgage premium that they was going to charge you over the years, and you just gave that to them. What they could advise my client to do is take that $10,000, add that to the $36,000 that you're going to bring. Now you're going to bring $46,000 to the table. You're going to take this and do that math on this one. Now we're already chipping away at the premium, at the principal, and we're seeing that, hey, we may not be 20% yet, but we are at least, 13, 14% with this additional 10,000 we bring to the table. So now we got 6% that we need to chip away at that principal where we can just go ahead and request this PMI to be off. Now, when you look at the comparison of the 10,000 going to the PMI and the 10,000 going to your principal on your actual home, you're going to see that $10,000 is better spent on you applying it to your actual principal than just handing it over to the lender. But remember when I said you're already at 13, 14, 15%, you just need to knock out that 5% more to get that PMI off. Now, if you can do that in a faster or sooner or later time frame, PMI can be on there for like less than 2 years. Keep your money in your pocket. If a lender say, hey, give me all of this money, and it's something on your loan disclosure and you kind of like, what is this? Well, you want to ask questions. You want to make sure that you're working with a professional to break down these things and give you a different view on how to approach, because in the long run, it's all about keeping money in your pocket. And if you're going to spend any money, it needs to be spent on something that you're going to actually get a return with, or it's going to benefit you on paying off your house to be debt-free, loan-free, all that good stuff. So again, my name is Raoul, broker, owner of Ready Fund Real Estate here in Austin, Texas. Thanks for watching, and I'll see you next video.